Thanks for listening. This is Brian Hurley from Business Performance Improvement. The podcast Lean Six Sigma Bursts are short lessons, comments, Q&A, and insights. If you have a question, send your question through the Anchor app, and we might feature you on a future episode. Or contact me at biz-pi.com. Back in episode 2, I talked about the difference between hard and soft financial savings. I wanted to go into a little bit more detail on that and talk about how you break out the different types of savings into mainly 3 big buckets. First one is income statement, the second one is cash flow, and the third one is growth. So the best way I can describe this is I looked at an article that talked about a cost savings project, looked like the Kaizen event that was performed, and they said that they saved $800,000. When I looked at the results, they said that $250,000 was bottleneck to sales was removed, and so they increased the profits. They also said $245,000 was a reduction in setup times due to the wasted time and effort. $100,000 was overtime in the department was reduced. $5,000 in material inventory was reduced, and $200,000 in expediting was eliminated. So that's where they get the $800,000 from. But technically, you need to break up the numbers into 3 different buckets. The first one that's most obvious is the $5,000 of inventory. So that is the value of the inventory. If you reduce that or use that up, you don't save $5,000. You bought the material and then you processed the material. You still spent $5,000. Where you save money on inventory is by getting it in and out of the facility as quickly as possible. And so that money isn't tied up in cash. It's available to be used quickly by getting it paid for it. And that was the whole premise that Toyota went through with Lean, is to try to speed up the process of getting raw materials in the door and out the door quickly so they could get paid and they could get that money to reinvest into more supplies. So that's a separate bucket. And that's the cash flow bucket, where you've got money tied up and it's just held up temporarily while you're waiting for orders or running things through your process. So the savings on cash flow is that you could have reinvested that money somewhere else with a better return rate than keeping it in raw materials or caught up in project work that hasn't been completed yet. So that's really the benefit, is you might take a interest rate on that money and say, had we not held on to that $5,000 in materials and instead put it in the bank, or what we call cash flow. The second one is the $250,000. That was the sales increase. That is a separate bucket. That's what we'll call growth. And that's where you are fulfilling demand and that is where you're fulfilling demand in the marketplace that you weren't able to fulfill because of problems in your process or supply chain issues or inefficiencies in your own operations. So if you are now able to fulfill that demand, and basically the customers are asking for it and you say, sorry, we don't have enough to make, or we can't provide it to you that quickly, and they take their money elsewhere, and now you're able to do that, then that's called growth. If fulfilling that demand quicker or earlier, then it would not be considered growth. It would be more on the cash flow, because you're now able to recoup that investment quicker. So that's a separation there. You have to have new demand that you've created, and that's why it's called growth, not just sales. So if this was fulfilling demand that they weren't able to fulfill prior, and it's above and beyond what they were planning to sell, then that is growth. If it's just getting the current demand processed and given to the customer faster, then it's cash flow. So the third bucket now gets into the income statement, which has to do with current expenses that you're already having in your business. And so the difference between the two will be hard savings and soft savings, which I talked about in an earlier episode. But the big difference is, am I avoiding costs, or am I freeing up capacity to do more work, or am I actually eliminating an existing cost? So if I'm removing an existing cost, then that's hard savings. And the only thing I see on there is the $100,000 of overtime that was eliminated. If they can maintain that, then we can take credit for hard savings of the overtime. And so that would be one of the pure reductions there on the income statement. The other two look like they're capacity improvements. So they're freeing up the capacity to be able to take on more work, or they're eliminating a type of work. And so those are going to be considered soft savings. And the reason is, as stated in the other episode, was this isn't actually leading to more output. It could, we hope it does. And if it does, we should see that in either additional sales or lower expenses somewhere else. But just the potential to have more things you could do doesn't lead to direct benefits. So this reduction in the setup time, that'd be great. That should lead to more products being able to be built or processed faster. So maybe they'll lower cash flow or lower expenses somewhere, but just freeing up the time doesn't automatically lead to results. Same with the expediting. That was eliminated, but if someone just sits around and does nothing with their time, then you can see why it doesn't become hard savings until you see something tangible come out of that extra time. So that's why we always want to take our reduction in time and redeploy resources to areas where they can take advantage of that extra time and turn it into more sales or faster sales or help lower costs somewhere. So those are the three buckets. So that's how I would recommend you report those, is in those three buckets. So I'd say, instead of saying $800,000, I would say $5,000 of cash flow, $100,000 of income statement or hard savings, $250,000 in sales or growth. And then I'd also have another bucket. I'd put the 245 and the 200 together for $445,000 in soft savings, because we haven't turned that freed up labor into something else more tangible yet. But hopefully they will be able to do that in the future. So I hope that helps when you're looking at improvements and how to summarize your results from a financial standpoint. I'm not a financial expert. This is what I've just been trained and been coached through other Six Sigma practitioners who've done some of this reporting and have a little bit more experience. So if you think I got something wrong, let me know. Or if you have questions, feel free to reach out through the app. Hope you enjoyed. Thanks. Want to better organize your work area or bring 5S methods into your organization? Check out the 5S guide from Creative Safety Supply. You also get 3 free bonuses. Bonus number 1, free 5S poster. Bonus number 2, free 5S PowerPoint. And bonus number 3, free 5S audit card. Go to leansixsigmaforgood.com/5S for the free downloads. They also provide floor tape markings, labels, signs, foam tool organizers, red tags, label printers, and other organization tools. Make sure you use code BPI at checkout to save 10%.